Good morning, traders. This is Chris Buss with Traders Profit Compass. It's pre-market on Friday, August 27th. As always, you can run this video at 1.25x on your video player to increase your efficiency. I don't think you'll miss a thing by doing that. Save you a little bit of time. What I'm going to do in this video is do a sector review on gaming. Gaming is it's in the consumer discretionary big sector ETF. It's going to trade as a cyclical. And one thing I wanted to do before we dive into the individual charts is point out that each subsector or industry group has a Dow Jones industry group symbol, and the symbol for gaming is this DJUSCA. And what it is, it's an aggregate of all the companies in the in the industry group, as the name suggests. And what's nice about having these set up is that we can use the principle of birds of a feather flock together idea. And by looking at one chart, you can kind of size up in rough terms how a particular industry group is doing. And so in that way, instead of looking at, the 15 charts that I'm going to show you here on individual names, you can get a really nice, quick snapshot of any particular industry just by looking at the industry group chart. And then if you see something particularly interesting, then you can drill down to find the industry group leaders and laggards, etc., and look for particular opportunities. So we see in the gaming sector, we see that the sector peaked in March. You got an explosive run off of the November low, and you'll remember that was when the vaccine announcement was made, and we got this big run up from November into March, and then the industry, along with a lot of other cyclicals, have been in correction mode ever since, and now is starting to emerge. And you can see here that price has taken out the downtrend line, has recaptured all the exponential moving averages, and you can see the posture of the price here with some overhead resistance in this area, and then opening a path up towards the prior highs if the industry can keep going. What I'll also in my chart setup, I have the momentum with the PPO indicator, and that's a cousin of the MACD. Not going to get into the differences, but it's basically the same thing presented in a little bit different way. You can see that below the zero line, that is showing you that there's not a ton of momentum in the group, yet momentum is increasing and about to break above the zero line. So that would be a bullish technical development coming from. Here was bullish momentum. It dropped below the zero line, indicating waning momentum, and then you got the long correction, and now it's starting to emerge. Just like in the RSI up here, once you're above the 50% line, and then when you drop below, it's showing RSI weakness or in a bearish regime, and now we've broken out above downtrend resistance and broken above 50. So that's indicating that both RSI and momentum are picking up. So if we take those three factors together, okay, price has taken out the downtrend line, recaptured all the EMAs, and with improving momentum and improving RSI, that gives me the green light to say, okay, let's look a little further. And one of the things I like to do that I normally don't show on these videos is kind of how I set up some of these relative performance ratios down in my lower panels. And so in this panel here, I have the industry group versus SPY. So when the ratio is increasing, that means the industry group is outperforming SPY. Your ratio is growing. Here in correction mode, the industry group is underperforming SPY. So down here, we see that, for the last couple of weeks, relative performance is breaking out. And then in the lower panel here, I have the industry group versus the SPDR sector, which is consumer discretionary, right? So again, here from November to March, the industry group was outperforming other discretionary industry groups, like apparel and restaurants and all that kind of stuff. It was outperforming the overall sector, so that's positive. And then it rolled over, and now, like the ratio versus SPY, we have the ratio breaking out versus its peers within the consumer discretionary sector. So those are bullish developments. So let's start drilling down, and I've got most of the tickers in the group here. I'm going to go relatively quickly. We could spend a ton of time on each individual chart, but in general, what I've done is highlight the specific support and resistance zones. And what you can do is, if you've got your pad handy, pencil and pad, you can write down on the names that you're interested in. You can write down, support and resistance, and you can set those alarms in your system. And what I've also done, because many of us are option traders, is that I've kind of flagged the issues that have weak option chains. And what do I mean by that? If it doesn't have an option chain, I'm not even going to present it. But if it does have an option chain, but it's not really that liquid, I call it out here as a weak option chain. And that doesn't mean don't trade it. All it means is you're going to have to be careful on, being patient, trying to get a good fill, and with the clear-eyed realism that, as you get out, there's not going to be a lot of liquidity there for you to just hit a market order and get a good fill. Like, just like Las Vegas Sands, for instance, has a very robust chain, which means tighter spreads, which means you can get in and out of it a lot easier than a name like AGS. But anyhow, let's go through it here. We've got a little triangle forming. What I like about this chart is you've got price not only breaking above the downtrend line, but also recapturing all the moving averages. And you can see price sitting right here on the 50 at $8.25. And here's an example. If you've got the capital and you're not worried, that's not a particular concern for you, and you liked this issue at $8.25, I'd just buy the common. If you like that and you have the capital, you could just buy the common and then, set your stop here at, just a little bit under $8. And then, you don't have to worry about, option expirations and all that kind of stuff. So anyhow, we've got a breakout in RSI, which is positive, and we've got an improving momentum picture. And so I think as long as it holds the 50 and certainly holds $8, this chart is improving. Here's Bally Entertainment. Same kind of scenario. Peaked out in March, has been correcting. Now we've got price coming off a double bottom and recapturing all the EMAs. It's above the 50. And I've got an important level here right at 52. You can see support, 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 and then resistance at several locations. If you're interested in the name, what I would do is set yourself an alarm at 52 and then reevaluate, get ready to go. That will have taken out the downtrend line, recaptured all the EMAs, and taken out overhead resistance here. You can see the momentum still below the zero line, but we do have RSI starting to emerge over 50. And that's gonna be a theme of all these charts. After any kind of correction, it's gonna have weak momentum. But the key is, are things improving? And what is price doing? Is it breaking out? Or is it, does it remain pinned under 52? So you don't front run these levels, or at least I wouldn't suggest that you do. Wait for the breakout. If you get a breakout here above 52, then that's going to be a great anchor point for if this thing gets on the upswing. And with all these cyclical stocks, it's going to have a lot to do with COVID. If there's new fears, if there's new variants, if Delta hangs around forever and casts a shadow on the economy, these are probably going to languish. It's not a coincidence that these started rolling over in March. That's when the Delta variant started coming in and kind of put the brakes on a lot of consumer discretionary, consumer cyclical names. So a lot of this group is going to be tied to the COVID news and reopening. Here's BJK. This is a gaming sector ETF, just like all the other ones. Correction, recaptured all the EMAs. I would set an alarm at 51. If you're kind of a person that wants to just trade the basket, not worry about individual names, this is one of the better ones within the group. Doesn't have a great option chain, but if you like a basket, this is one of the few ETFs that are out there. Doesn't have a lot of volume, but if you wanted to trade that, that's fine. I would set an alarm here at 51. You can see that momentum is improving and RSI is breaking out. Another thing you can use an ETF like this for is, if you didn't want to go get all those industry group symbols, like I suggested in the first slide, what you can do in your, say software, you can get or track the biggest ETF in that group, and then that'll do a pretty decent job of representing how the group is doing. So here's that one. Here's Boyd Entertainment. This is a domestic a domestic U.S. company. I don't think they have any overseas holdings. So you've got a level here at 56 that was solid support, and now we're up at the upper end of value here at 62. I would alarm 62, and if you get a breakout there, that would be a level to buy, and then you can set your stop just below. But you can see that momentum has already emerged above the 0 line and already emerged above 50 on the RSI. So from that standpoint, the indicators are supporting an additional move higher. So again, alarm 62. And while you're at it, what I like to do if I'm going to the trouble to analyze a chart, I'll always set an alarm on the downside as well. So for instance, here I would set an alarm at 56. Why? Well, what happens if this never triggers, right? And then there's more corrective activity or more consolidation. Then it pulls back, and you've long since forgotten about it, and it comes back to 56. Well, that has proven it's been a great place to buy, and then you can buy it here against 56 with the 200 just below. That would be a nice long entry as well. So I would alarm 62 and 56, and like we always say, if it were to break out from 62, then you've got this trading range, $6 wide. Your target would be 68 on the upside, which lines up really well with the prior high. Here's the CNTY. This is a small regional domestic gaming company, kind of right here in the middle between resistance at 14.5 and support down at 11. What you could do if you were really interested in this name is, if you wanted to, you could trade against the 50, which is right here at 1262. And actually you've got the 8-day and the 20-day and the 50-day all sandwiched here close. That should be really, really good support, I would think. And so you could take a long against like 1250 with a stop just below, and then play for 14 and 1450, and then try to get see if you don't get the breakout here above 14.5. But again, notice the posture of the PPO above the 0 line, and RSI above 50 as well. And notice the corrective activity in this one was much shallower than the other ones that we've looked at, and that in and of itself shows you that it's a stronger stock. And also notice this one did not peak out until June, whereas all the other ones were already rolling over in March. So relatively speaking, this has been a stronger name. Churchill Downs, right here at an interesting spot at 206. Just like the others, peaked out, corrected, back to a pivot point here at 206. If you were interested in that, I would set an alarm there. And then I would set another alarm at the 200 at 194, which is right here. If you got a pullback to 194, you could get long against the 200. Otherwise, I'd set an alarm at 206 and see if you don't get the breakout, which would open up quite a bit of topside running room. The option chain is not that great. Be patient with a fill. See if you can get something. Maybe get it on a down day. You know, if you were to get a little breakout, you know, followed by a red day, that might be a strategy to see if you could get a fill. like I said, I don't recommend buying it below resistance. I think in this environment, you want to make sure that price proves it to you. Prove it can break out. Once it's proven it can break out, then you can kind of pick your spot. And if you have that alarm, you should be able to get it early, early on that breakout before it really starts to run. Here's Caesars, another example of strong stock. Didn't peak out until June. And remember, they've got a much more significant online sports gambling book. In addition to their physical properties. So they've been in the news quite a bit in the last year, making acquisitions. I think they just bought the online gaming from the Golden Nugget, Tillman Fertitta's property. They just bought that out. So they've got a growing online gambling business. But from a technical standpoint, of course, you would have liked to hit this low here, or liked to have bought the recapture of either the 200 here at 85 or up here at 87.50, 90. Those were buy points. Recapturing the 50 from below is usually a good buy point, but we've obviously missed all that. So right here in the middle, I would alarm 105 for a breakout, and I would come back and set an alarm at the 50. Let's call it 93.50, where you can set that alarm. And if you get a little back test of the 50 and you like this name, that would be a good place to try along in the name at the midpoint of this range and right against the 50. And then if it loses the 50, then you're out. Draftkings has recently had an explosive move. We had this in our group. We had 55 alarmed here. A number of traders are in that. I was very surprised at this second impulsive candle. I guess Kathy Woods with ARC is out there doing some buying in the name. Right here in the middle, kind of a tough trade. I mean, to take an entry here, if you got a back test of 55, I would certainly put an alarm there. And I would put an alarm if you're the type of trader that would, if price took out a prior high here at 60 and you wanted to grab it there and kind of front run the breakout at 62, that's fine. If that's not your style, then I would set an alarm at 62, and then I would set an alarm at 55 to see if you can get a back test. But notice all the moving averages have moved sharply higher, and they're bullishly stacked. So this has some nice momentum. Notice that momentum has broken out above the downtrend line, broken above 0, so that's bullish. And you've also got a breakout in RSI up into the bullish regime above 50. So those are all supportive of a move higher. This is Golden Entertainment. I believe this is a mostly Macau-based name, but do your fundamental research on that if you're interested. But just breaking out here, breaking out from this 51, 52 area. Notice that this stock has not even had any real correction. What it did have is it had a nice consolidation here. And of course, hindsight is always 20/20, but there was a great level here at 47. that could have been used as a buy location. And also notice that the 50 here in green has served as a very nice support level. Notice all the moving averages are bullishly stacked. Notice that momentum never even did go below 0. Had a momentum reset here at the 0 line, which is great. And RSI really never even dipped below 50. So this is a strong stock. And, right here at 52, I think it's like now or never kind of thing. If you want to get involved, this would be the place to do it. But from a chart perspective, this looks really, really strong. I don't remember what the option chain looks like. I would imagine it would be on the thin side. So just take your time, see if you can get a good fill. But I really like this chart. It's too bad we couldn't grab it here at 47, but that doesn't mean that this is bad, because what you can see here is it took out this prior high. This other breakout here proved to be fake because it came back below 47 and now has come back. So I think right here at 51, 52, right in that range would be a nice spot to hit it if you wanted to get long. IGT is they make a lot of the slot machines, a lot of the electronic games right here at a very interesting spot. You've got technical resistance at 20.5, and that's where the 50, the declining 50 comes in. So if it can break above, let's just say 21, make a move to 21, recapture the 50, take out this resistance at the top end of value, I think that would be a good buy. You've got RSI breaking above 50. You've got PPO improving, still has work to do. But I think if you get a breakout above 20.5, 21, I think this will be on the upswing, and a good chart. If you wanted to set a downside alarm, I would just do it right here at the 200 at 1850. Set yourself an alarm there if there's some kind of a pullback, and that would be an important place for both bulls and bears, because if things all of a sudden fall apart and you lose the 200, then I can almost guarantee you it's going to come back to 15, where is the low side of value and where there was a lot of support back in the day. So set a downside alarm at 18.5. Las Vegas Sands, much weaker chart. I think there's a couple reasons why. Remember, Las Vegas Sands doesn't have any more property in Las Vegas. They sold it all to MGM. So now this is an Asia-based gaming company. Singapore, Macau. I'm not sure if they have a property in Hong Kong, but basically just Macau and Singapore. And you'll have to look at the other properties that they have. But they're basically out of Las Vegas now. Why does that matter? Asia is way behind the curve as far as COVID vaccinations go. I mean, if you look at the rates of countries in Southeast Asia, Malaysia, all that kind of stuff, they're way behind. I mean, like 5-10% of the population is only vaccinated at this point. So it's holding back the gamers in Macau with traffic down. So one of the weaker charts, you can see, although momentum is improving, that is still pretty low. Here it just got too cheap. I mean, when you got down to 37 with all the COVID fears, that's paid well for, people that pick the bottom. That's pretty hard to do. That's really not my style. The areas that I would be keying off of on Las Vegas Sands is right here in the 44.50, 45 area. Why? You've got a low that was marked back here in the fall at 44.50, and then you've got the declining 50 that's coming in to meet that area. What I would like to see is price take out 45 and then take out the 50, and then you would have a nice support zone to shoot against between 45 and 44.50. You could set your stop at 44, and then you can see if you can get a push into 48.49, and then eventually take out the declining 200, and then you would be on your way. I think this is going to take some time. This would be more like a duration type of play. If you got this breakout here, at 45, I think you got to look out at October, November, January for that type of a play on a repair mode type of chart. Because as long as price is below the 200 and the 200 is declining, that tells you in and of itself it's a weak stock. So if you're more of a momentum trader and you like more bang bang type of trades, I don't think this is the one. I think this is the one if you're looking for value and a more longer term type trade. Macau is going to recover. Asia is going to get better. And as that happens, Las Vegas Sands will benefit from that. But it's going to take some time, and it's going to take some work for that to happen. MGM, on the other hand, bought all the Las Vegas Sands properties. And you can see here that it has been in consolidation mode since March. It never really had a correction. And now momentum is on the upswing, breaking above the zero line. So that's bullish. We've got a breakout in RSI. So that's bullish. And we've got price that has recaptured all the EMAs. Right here at 42, I don't think you have a trade. I think you got a alarm 44 for a breakout and alarm 40 for a potential back test. And if you got a back test of 40 and you like the name, I would hit it there with a stop just below. And if you got the breakout at 44, I would hit it there as well. We've got a $7 trading range from 37 to 44. So if you get a breakout from 44, you can look for 53 would be your measured move target. 7 added on to 44 is, 51. 51 would be your measured move target. 7 on to 54, or 7 on to 44 is 51. That would be your target. Doesn't mean it can't go higher. That's just the measured move out of this consolidation. One thing also with MGM, they have a growing online gambling presence. So that's a component of their operation. MLCO is a Macau centric name. The chart is almost identical to Las Vegas Sands that we just looked at. If you want to fish at the bottom, You've got a pivot point right here at 1275. You can get long against that level, with a stop just below. But I would definitely buy some time if you're trying to pick the bottom in these Asian gaming names. You've got a declining 50, declining 200, very weak momentum, weak RSI. But you're trying to buy value if you're buying a name like this that that it's going to come back up here and give you a double. At the prior high is basically 23.5, 24. You're down here at 1250. So at that point, you're playing for a double over a much longer period of time. PENN, Barstool Sports, and all that kind of stuff. Making some moves here off of this consolidation bottom. I would set your alarm right here at 82.50. It's right on the doorstep. Rising momentum. RSI breaking out. Price just recaptured the 200 like 2 days ago with this power candle. So if you can get a breakout here at 82.50, I really like that trade. You've got an open runway, as I see it, up to 93. So you got potentially a $10 move there. And then if it can take that out, you got another 10 up to like 105. So a quickly improving stock after a long correction and basing period. And so now that it's on the upswing, I really like it here at 82.50. You're always welcome to alarm the 200 here at 78. If you got a back test of the 200 and you wanted to front run a breakout, you could do that. I don't think it's much of a difference here. You could also, if you wanted to, alarm the 50 back here at 72.50. But I think this is, if the market stays together, I think this is primed for a breakout at 82.50. We had alarmed this in our group earlier this week. Red Rock Resorts, domestic company, trying to break out here at 46, $7 trading range. Alarm 46. If you get the breakout, you can look for 53. 46 plus 7 is 53. That would be your measured move target up here at R2. And you've got momentum breaking above zero, and you got a breakout on RSI. So I like that. Scientific Games, steady Eddie, not a big correction. They do a lot of the electronic gaming, stuff like that. I would alarm the breakout level at 78, and I would alarm this pivot point and trendline support at 68. Right here, if you got a pull in to this trend line with all these moving averages bullishly stacked and squeezed together, I like that trade. If you got a pull into trend, I would buy it. You can see that this trend line has been really nice support on the way up. I think that would hold there at 68. That would give you an opportunity for a $10 trade up here to 78. And then if all the stars align, you get the breakout, and then you'll be off to the races. Thin chain, take your time, see if you can get a good fill. And then here on WYNN, big Macau presence. They do have Las Vegas properties as well, but you can see the posture of the chart is totally different than the quote the good ones. Just a lot like that MLCO chart, a lot like the Las Vegas Sands chart. Not much of a bounce so far. We've got declining 50, declining 200. if you wanted a reclamation project on a break above, say 101, something like that, you could get along and buy some extra time, and you could stay long against that level and see if you could get a reclaim move, reclaim of the 50, reclaim of the 200, and get a move up to 115. So I think there's $15 of upside in this trade, but not without a lot of work on reclaiming these moving averages that will act as resistance while they're, you know, pointed down and overhead. So that's all I got for you. Just some thoughts. You will see, I think, the charts in this group break down into two groups. One, the domestic companies look a lot better than the Asian-based companies or those companies with a lot of Asian exposure. Those charts look totally different. The Asian companies are reclamation projects that are going to take extra time and will be very dependent on COVID. And the group as a whole, as it tries to recover, it's going to be COVID dependent. If we can get ahead of Delta, I think this group can be off to the races. If there's more COVID headwinds or some other economic problem, they are going to live and die with the economy. That's why they're cyclical. And so what you want to see is improving economics, COVID going down, and most of all, follow the price and the charts. That's going to reveal everything. If you get a breakout, trust it, set your stop, honor your stop, and I like the group as a whole. Like I said, I think there's certain stocks in here you want to gravitate to, and if you buy one of the reclamation projects, just know what it is and buy yourself extra time. So there's some marquee names. I mean, MLCO, Las Vegas Sands, and WYNN used to be the leaders, right? But now they're the laggards because of that Asian exposure. So they'll get back up there. It's just going to take some time. So if you're new to the channel, thank you so much for stopping by. If you like the analysis, subscribe to the channel, hit the like button, jump over in the show notes. You'll find a place to register for all my content. I will do my best to keep you loaded with actionable information, and we'd be glad to have you. You'll also get an invite to our trading room. We'd love to have you there as well. Longtime listeners, I hope you like the analysis. Thank you so much for the support. And so this has been Chris Butts with Traders Profit Compass. Talk to you next time.